Okay, welcome everybody to episode 100 of the Volatility Barometer podcast. Appreciate everybody coming today. I know there's going to be some questions. Bitcoin is crashing and we're going to talk about it, so that'll be interesting. I know I get a lot of questions about it, even though, of course, as you'll probably learn over the next 15 or 20 minutes, that I'm not super bullish long-term, but I'm, as I've always said, reasonably bullish medium-term, so that'll be interesting. But episode 100, I mentioned last week, I don't really know what to do special about it. For me, it's just a little personal milestone because live streaming, it is, maybe you think it's easy, but for me, as a nervous public speaker, this is a difficult thing to do. And like I said, episode 100, I'm still nervous. People were surprised when I said that last week, but I get nervous. I have trouble breathing. But yeah, nothing special today. I just wanted to say that I definitely appreciate everybody coming, and the only thing I can do is make sure that the next 100 are even better than the first 100 that we did. Actually, today I just did something haven't watched in a long time, but I just checked out the first one that I ever did. It's actually still on the YouTube channel. You can just go see it, labeled First Live Stream, and it wasn't great. So I think I've come a little bit, but next 100, I promise that they will be better. The other thing I just wanted to mention really quick, something that I would like to do is have some type of draw or giveaway at the end of this year. So that is one thing that I will probably figure out how to do it. I'm just going to give all the money that the YouTube channel makes. It is not very much, so don't expect, not giving away Corvettes over here, but I'm going to give all the money that my YouTube channel makes this year in the form of a giveaway at the end of the year. And I will probably double it because it's really not very much money. The best year I ever had, I think I made $4,600 or something like that. So, the YouTube channel is just a tiny, tiny percentage of my income. It's, people say, oh, you're doing this for the views, you're doing it for the money. No, I make almost nothing off YouTube. So I'll probably just, whatever it is, hopefully we can hit that number, I'll double it, and we'll have a nice little draw. So hopefully it's somewhere in the neighborhood of $5,000 to $10,000. I will figure out some prizes and give them away. But the one thing that I will say, it will definitely be connected to two things. Number one, you have to be subscribed to the channel, so do that now. And number two, I will probably figure out some type of way to also get more people with more entries into whatever the draw prize is if you comment on my videos. So something like that, just to push a little bit of engagement. So make sure you're commenting, make sure you watch the videos and, ask a question, and that'll, more names in the hat, so to speak. All right. So, Bitcoin. Let me just check the price really quick because I was just busy doing some other last-minute stuff. 84,000, so it's recovered a little bit. It actually made it down as low as 79 something. So, yeah, pretty normal, pretty run-of-the-mill stuff. But what I wanted to talk about, I do trade Bitcoin fairly actively, and I don't talk about it much because there's a couple reasons why I'm not going to be adding it to the main VTS stuff. Let me just really quick, just so people can see what that even means. Some people are probably new, but the Bitcoin strategies, they have no place in my main portfolio. I think that I'm really happy where things are right now. We've got the 4 strategies. If people want to get very aggressive, they can do just the top 2 strategies as far as rate of return goes. It'll come with slightly higher drawdowns, but people can do this if they prefer. But, as you'll see later on, the Bitcoin strategies don't really have a place here in the main portfolio, so I won't actually be adding them to the email or anything. But what I will say is, if enough people want it, if there's some, comments that, hey, this is great, I'd like to follow along, then perhaps I'll find some way to get you the signals in some form. I don't know if it'll be in the VTS Options community. I don't know if it would be on Twitter. I have no idea, but we'll see if people are interested in how I personally trade Bitcoin. It's probably very different from what you've seen. So, the first thing that I wanted to go through before all of this new stuff is, some of you do know that this is not the first time I've talked about Bitcoin. I've actually, if you go to the YouTube channel, let me just open that up for you. You go to the main YouTube channel here. If you go to live, and you go down quite a ways, we've been talking about Bitcoin for a couple years. This one here, going all the way back to June 2022, I bought 2 Bitcoins maybe a few days before this live stream. So you can watch this one. I went through a bunch of myths, basically problems, debunking a lot of the myths of Bitcoin. Let's see if we can find some of those. There's 5 myths of Bitcoin, and then I also explained my personal reasons for buying it. And so the first thing I want to do is just update everybody really quick because people ask me all the time. So essentially what I did on the 13th of June, 2022, so it's been a while now, I bought 2 Bitcoins. And what I decided to do was hold one of them just indefinitely, maybe not forever, because I do think its days are numbered as far as 3-4 years down the road. But I think the next year will be pretty decent. But actively trade one and hold one and just see which one does better. And unfortunately, there are not a whole lot of transactions here. You can see here's the original one. I bought both of them for $24,460, and my first sale was at 66. And then maybe 6 months later, it looks like, so March 2024 to September, I bought it again for 56,000. And then I sold that one last November, quite recently, for 96. It went all the way up to 110. So there was obviously some time there where I felt, maybe I sold a little bit early. Now, of course, it's back down to, the low 80s. So I'm sitting pretty good. But this is essentially what people wanted an update on. My buy and hold coin, I guess I could update this. Let's call it 83,000. Oh, 830. That would have been great. So you can see that my active trading is significantly better than the buy and hold Bitcoin. And this kind of gets me into today's topic as well, because I do think that while there's certainly a case to be made that it is so unpredictable that perhaps buy and hold might just be the best strategy. But anybody who's watched my live streams and videos, I'm not a buy and hold investor. So that's just too boring for me. I'm going to stop doing that one against one. I'm going to still hold the one Bitcoin, but I'm going to do something much better with the other money that I have allocated. It's really not a whole lot for me personally. Like I said, it's not going in the main email. There's a couple things that I did want to say. First of all, and I'll have charts to back this up in a second, but Bitcoin isn't really any better than leveraged equities. This is one of the reasons why it just doesn't really have a place in my portfolio, because we already trade the leveraged NASDAQ. And Bitcoin is basically leveraged NASDAQ. If you don't believe me, I'm going to show you that in a minute. And I think a lot of you are going to be surprised. You're going to see the chart and go, wait, that can't be right. They're basically tracking each other. This can't be right. It's true. Bitcoin, leveraged equities, leveraged NASDAQ, it's pretty much the same thing. And then the second reason is, I think people, you get really excited about crypto and Bitcoin, but the thing you have to understand is its future is not guaranteed. It could actually go, maybe not to zero, but it could go down and never come back. And I don't think you could make the same case with equities. So if you're comparing two highly risky underlines, Bitcoin versus, say, triple leveraged NASDAQ, they're roughly the same thing. I don't think you can make a case that NASDAQ will go down and never come back. Can certainly make a case that it'll have a massive drawdown at some point, like 70, 80%. That's going to happen. But it will recover. We're talking about the world here. Everything in the world, all consumption, all companies, the whole thing is based on that. And I'll tell you, if stocks go down and never come back, we've got bigger problems than how much money we made in Bitcoin or stock market. It's at that point, they would be both quite worthless. And we'd literally be talking about, water, food, and shotguns. That's all we're really trading at that point. So stocks will always come back. That's why stocks, even leveraged, can go in my main portfolio. Bitcoin, while it might continue going up just as much as equities, leveraged equities, you could easily make a case that it's just going to dwindle at some point. Maybe it just goes down. Government does something with a Fed coin of some kind, gives out a stimmy check, gets most people into the system. At that point, maybe they'll go a little bit aggressive against Bitcoin because, U.S. government doesn't play nice with competitors to their own currency. And they want their tax money, right? The U.S. is also running out of money, just like a lot of Western countries. So I don't see them playing nice with Bitcoin for, the next 10 years. I think 3 or 4 would be stretching it. But yeah, those are the two main reasons why. This is just play money. But let me show you what I do with my money. And you can kind of see if this fits in somewhere with what you do. So if you've never seen my strategies before, this will probably be somewhat new for you, but for the others, this is just a review. This is a short volatility strategy where we use basically the short volatility ETF, SVXY, ranking the volatility metrics in the overall market, and then switching to the position that has the best chance of success in that volatility environment. So essentially volatility targeting, where mid to low volatility, we are short vol with the SVXY. move into gold when volatility is elevated. We are currently in gold now. It's not extreme enough to be over here, but we are in this range for the last week. And then if it does get super extreme, we go long volatility with the VIXM. So that is the tactical volatility strategy. My Bitcoin strategy, which I call the Bitcoin Breakpoint, because it is literally just two positions here, it is somewhat the same thing with different metrics and different thresholds, but mid to low volatility, we will be holding Bitcoin. Now, I'll talk about replacements in a second. There are a few that people could consider if you don't want to just actively transact with Bitcoin itself. But mid to low volatility, mid to high volatility, short-term fixed income. So couldn't be simpler, just a breakpoint middle strategy. And essentially, this is what it is. So you're not going to get any signals here. There's quite a bit hidden from this spreadsheet. Sorry about that. I don't give out the secret sauce here, but I'll kind of explain what's going on. So S&P 500, I don't benchmark to the S&P. You'll see why in a second. TQQQ, this is 3 times NASDAQ. This is actually the benchmark that I'm using for my strategy. So this is just a little side tangent, but a lot of people sometimes ask me, how do you benchmark? Which one do you go against? You always have to have a benchmark that two investors are basically, they could choose between two things, right? You would never benchmark a Bitcoin strategy against S&P 500, right? There's nobody out there that is deciding right now whether they should buy and hold Bitcoin or buy and hold the S&P. These are entirely different risk tolerance, right? It's ridiculous. Maybe triple leveraged, sure, but not the S&P. You would never do an S&P 500 strategy and benchmark it against bonds, right? There's nobody that's making that decision. So the reason that I used triple NASDAQ as the benchmark is because it's very, very close to Bitcoin itself. And of course, we do have buy and hold Bitcoin. It's just a chart here, just for your interest. I have a break here, July 1st, 2018, just because this first run up here, the reason I went back to May 11th, 2015 is that's the launch of this ETF, the Grayscale Bitcoin ETF. It launched then. So arbitrary number, but that's when it launched. But this first run up in Bitcoin, it was literally up thousands of percent. So it has actually increased the on paper back test to a pretty high level. So I will actually show you what it would look like if we started at a more reasonable point, right? After that first run up. I think that's more fair. Plus, a lot of people were not trading Bitcoin in 2015. Almost nobody, in fact. They didn't really start doing it until later. Short-term fixed income is just a place to dump the cash, right? You can keep it in cash if you'd like, but, why lose ground to inflation when you really don't have to? So this is the strategy. And there's a lot that goes into it, but the entire metrics are all condensed down to a single number. And then based on that number, I can tell which position I'm in. So it just spits out so if we go down to the bottom here, what are we at? February 28th, it would just maintain fixed income. So the strategy has been in fixed income for the last 5 or 6 days, avoided some of the drawdown. That's kind of the point of being a tactical investor. But this is the results. So Breakpoint or Bitcoin Breakpoint strategy in purple. All my strategies have their own color. So I was running out of colors. So now this one's purple. And I've been trading it for about 6 months, 7 months. It's going pretty well. It exits to safety and kind of reduces the drawdowns. But this is what I was talking about. The rate of return is a little bit alarming. Don't be confused by the 85%. Like I said, it's actually probably a little closer to something lower. So we will find July 2018, and you can use this number compared to this number. That's much more realistic. So if people don't know how to get a basic rate of return, of course, I do everything in Excel, but you can use online stuff as well. Just any website will do it. So what did I say? 168,000, give or take, right? What is it? 168,300. And that is going July 1st, 2018. And then it went all the way up to 4.119 million, give or take, right? Not super important. So the rate of return, 61%, still very high. But another thing that we know about Bitcoin is that it does kind of go in waves, and each wave upward has been a little bit weaker than the previous one. So I would say that even that is probably ambitious. For my strategies, as I've said many times, anything like portfolio wide, 15% a year for the rest of your life is fantastic. That is incredible rate of return. If you could get 15% a year with all of your cash for the rest of your life, you should take it. And so when you're talking about risky strategies, you'd probably want to get in the double-ish range, something in the 30, 35 range, because it's going to come with drawdowns. So your portfolio wide, think 15 to 18%. Your risky strategies, maybe 30, something like that. And then you're going to have some diversifying strategies that, get a lower rate of return. It's kind of how it works. So don't get thrown by the 85. I would probably think in your head more close to 40. But this is the strategy. You can see basically the point of it. During good times, it is just holding Bitcoin or a Bitcoin equivalent. So it's not outperforming Bitcoin during good periods. It's just going flat during the really bad ones. So you can kind of see it here, the benchmark 3 times NASDAQ. During 2018, flat there. During 2020, pandemic, flat. 2022, it was made a nice profit. That's kind of the point of tactical investing. It's not so much that your aggressive positions are making more than the underlying during good times. It's actually this stuff and the gold that's putting in the heavy work. It's actually exiting to cash and fixed income. That's really how you're making your forward progress when you are a tactical investor. So that's the strategy. And then just like I said, if people don't want to trade Bitcoin directly, then there are also some replacements that we can consider. I haven't put together a presentation for all of these yet, but there's a few that I highlighted that are definitely interesting. MicroStrategy obviously is the first one that's going to come to mind for people. And in fact, if you go in the chat section right now, there's a little poll there. I don't know how many people correctly. Let's pause that. Looks like 25 people have voted. Go ahead and vote in the poll. 38% MicroStrategy, 42% for the IBIT, I will call it. And but MicroStrategy is important because you'll see it here. You can see very clear outperformance in the last year. But obviously MicroStrategy is a super leveraged, very intricate thing in the last year. You can see it was a fairly normal Bitcoin-ish tracking ETF or stock before that. But in the last year with the convertible debt stuff and Saylor going crazy with, his convoluted plan to tell everybody that it's guaranteed money, it is not. Spoiler alert, it's just as risky as anything else in the market, probably more risky. But it's changed a lot in the last year. So it is interesting. It's going to go up more in good times and it's going to go down a lot more in bad times. We know that. But if we remove MicroStrategy, this is what I was talking about. Now we get into kind of the comparison of triple leveraged NASDAQ here in orange versus Bitcoin in red. This is why I'm saying it's basically the same thing, right? I mean, at least in the last 4 years. This is going back to January 4th, 2021. So over 4 years of data here. You can see triple leveraged NASDAQ is actually slightly ahead, 1608 compared to, it's basically the same thing. Slightly lower drawdown, but they're so huge, we'll just call it the same thing. But you can see that this is why I said there's a lot of people out there, they're trading Bitcoin, and I mean, all power to you. That's great. Trade your Bitcoin. But there's a lot of people who think that they're on like the cutting edge here and they're being different and they're alternative investors and they're in on it and they understand what's going on, and all these plebs that trade stocks, they have no idea. They're in the old school traditional world. Well, unfortunately, I hate to be the bearer of bad news, but when you're trading Bitcoin, you're doing nothing but triple leveraged NASDAQ. That's basically what you're doing. Every time the NASDAQ crashes, so will Bitcoin. Every time it goes up, so will Bitcoin. That's the markets. It's basically just another vehicle for all the excess liquidity that has been pumped into the market for the last 5 or 10 years. That's what Bitcoin is. It is not some world-changing thing that only the precious few understand and everybody else is going to get left behind. Sorry to tell you, it's leveraged stocks. So, yeah, there's going to be a lot of people hating me for those comments, but it is true. I mean, the data speaks for itself. The correlations are unbelievably high. So anyway, if we go to the IBIT, which is a roughly $60 billion fund at this point, it's very big. We can also see that if you are looking to trade something instead of Bitcoin, and you just wanted it to be super easy, you can just buy in and out just like a regular ETF, the Grayscale GBTC and the IBIT, the new iShares Bitcoin Trust, they're basically the same thing as Bitcoin as well. They're doing a pretty good job. You can see the turquoise, the IBIT, it's slightly below, but actually it just got off to a little bit of a rough start. You can see here, it probably took them a few days to, I don't know, they had to shuffle a few things around. If we just make this track Bitcoin for, like a week or something, just do that, and then go back over here, you can see it's basically the same thing as Bitcoin, right? The IBIT, the GBTC, and the Bitcoin itself, it's all the same thing. So, of course, this will bring up the argument, kind of like the old, let me just take that back so I don't save my spreadsheet with the wrong data. But it probably gets back to the similar thing when you're trading gold. Like people in the know, like the gold bugs you'd call them, they sometimes, they'll flame you for buying the GLD, but it's basically the same thing. It's the same thing here. There might be people that think that, you should be a purist and you should only trade the Bitcoin and you should only save it in your Trezor safe wallet. Like, that's what I do for a Bitcoin, and it's pretty nerve-wracking to have money on something that's just sitting there. But as I showed, IBIT, GBTC, they're kind of the same thing. So you can do those as well. So that's what I'm doing with about half my money, about half my Bitcoin money, instead of doing this, head-to-head thing where it's just so boring for me. I think I could continue doing this. In fact, I probably would buy another one here just because I'm trying to beat this, and it's actually, you don't have to call the absolute tops and bottoms, but it's not overly difficult to actively trade and beat, buy, and hold. But it's just so boring for me, like 1-2 transactions a year. So I'm going to take quite a bit of my money from that Bitcoin thing and just go all in on this. With that, not all in on all my money. It's a small allocation in my portfolio. But the other half of my money will go into option trading, just active option trading. I've been doing that for 20 years now. Basically, I started my career in 2005 as a pure options trader. So I will be doing a lot of that. I have been for a while. And for that, I will be using MicroStrategy, mostly MicroStrategy, but also GBTC and, all the new ones, the IBIT, maybe the ARC one. I think it's 2 billion already, so it's probably tradable at this point. There's a big list of them. And so, again, I don't want to take up everybody's time. People are probably here to ask specific questions. But just to give you a few ideas of the things that I typically do with my option trading, one thing that works out really well is the wheel strategy. So Bitcoin, because of its violent moves and because of its, super high volatility. Oh, wait a second. I have the wrong spreadsheet open. Why is that? Why do I have the wrong spreadsheet open? Doesn't seem to be saved correctly. So which one would be the right one? Sorry. Just give me a second, just to explain the wheel strategy with something to look at rather than just listening and staring at my face. But you probably understand the wheel at this point. It's nothing that I designed or anything. It's been around a long time. I just apply it a little bit differently with VXX and UVXY, and I typically flip it on the other side of the equation. That is also the wrong spreadsheet. I'm an idiot. Yeah. So essentially, while this is loading up, the wheel strategy, you are basically, when it's a price that is, reasonably good, it doesn't have to be the best. You can't call tops and bottoms, but you would start with a cash secured put, which is essentially selling a naked put option, but you've got enough money in your account to actually get the shares if you were assigned the shares. And then if that were to be the case, then now you hold the shares and you would turn around and sell a covered call, and you would be very aggressive with that. You're not trying to make money on the capital appreciation of the actual underlying. You're making money on the double-sided premium. So the short puts are aggressive and the covered calls are extremely aggressive, sometimes well in the money. You're trying to get the shares, get some money for that, in the money covered calls, dump the shares, and then kind of rinse, repeat that over time. And for me, in my experience, it can work out pretty well if you're aggressive with the covered calls. This is one of the things that a lot of people, they try to cheap out on the covered calls. They try to, let's say you're assigned at 100. They don't want to sell it at 100. They'll try to sell it at 120 or something. And you end up holding shares for too long. And people can get themselves into trouble because you're not actually reducing your downside risk when you sell puts and sell covered calls. The stock itself can still go down. So my tip for people would be to cash secured put, If you don't get assigned shares, then you just repeat and keep going and collecting premiums. But if you do and get assigned, you're at this step, then you move on to the covered call. Be super aggressive here and just get rid of those shares and go back to the beginning. But obviously the reason it's called a wheel of fun, I call it the wheel of fun. Most people just call it a wheel trade, but I named it, 15 years ago or something, the wheel of fun. You just keep going around and around like this. And of course, you can also do it on the call side. So you could sell a cash secured call. In this case, if you do get assigned, that means that you're now short. So you would be doing the calls when the price is extremely high. Doesn't have to be the very highest, but you can also do this on the call side. Just be careful when you're talking about something with Bitcoin. It can run really, really high. So I might try to avoid this, but technically speaking, you can do the wheel on either side. But I stick to sort of this side. For me personally, I think the wheel is super suitable for aggressive trading on Bitcoin and all the underlying derivatives. Another thing that I do is, of course, iron condors, especially because they're very volatile. You get super wide wings, so you can make a lot of very easy premium with iron condors. Another thing that I do, again, I don't want to take up time. The Q&A is what most people enjoy, but I call it my calendar roll strategy. And essentially, it probably will take several videos to explain, but I would just sell buy a very long dated calendar option and make sure the long contract is for like a 6-month expiry put calendar. And then the short month is maybe for a month. And then the goal there, because the long is going to be way more expensive than the initial first month short, you're trying to basically just keep re-upping the short put 6 times for once per month for 6 months and hoping that the short premium on all 6 of those puts is larger than the long put premium. And then you let the put run and hopefully that's the one that actually pays you. So I call that the calendar roll, when you're basically trying to sell enough premium to where your long put option is free and then you just let it run. That's a good strategy. If you're the type of person that doesn't like to be too intricate and too detailed with things, you just like to draw a line in the sand, then vertical options are always great. Anytime you think it's relatively cheap, again, not the very bottom, but relatively cheap, at that point you can set up vertical options, maybe give yourself 3 or 4 months. And then when you think it's relatively expensive, do a vertical option on the other side, thinking that it's going to fade back down. Give yourself 3 or 4 months, because you're not going to be right like down to the week or two. But in 4 months from now, it's not that hard to guess which direction these things are going. It's very emotional driven and it's very news cycle driven. So you can kind of vibe off Twitter if you really get a feel for how Bitcoin moves and you just follow a bunch of Bitcoin accounts on Twitter. When it starts getting really bearish, at that point you can start putting your verticals on, because probably within a week or two, it's going to reverse and go back the other way, but certainly within like 3-4 months. Same thing on the high. When you start seeing everybody on Twitter talking about how insane it is and how much money they're making, and it's just crazy, this is the easiest thing in the world, at that point, you're probably reaching, approaching a top at that point, Twitter, it's a crazy place. Another thing I'll remind people of, just, I'm sure you've gathered this at this point, but Bitcoin is unbelievably top heavy as far as who's making the money. So don't let all these Twitter accounts and Twitter bots convince you that this is like the most popular thing in the world and you're missing out. You're really not. It's like there's like 10 wallets that have insane levels. And then there's probably, a couple hundred other whales that have, hundreds or 1,000. And then there's just a million people on Twitter who have like 0.23 Bitcoins or something. And they're the ones that are pumping. So it feels like everybody's in it, but it's not really everybody. It's like 500 people are in it, and then 5 million people have a tiny exposure. So don't let the crowd aspect of Bitcoin push you in certain directions. It is fringe. Like, it's not that popular. Not many people have even 1 Bitcoin, let alone anything significant. So little tip there. And also, just looking at the poll, MicroStrategy is popular. I wanted to show people just very quickly, remember leverage is a killer, right? You got to be very careful, because Bitcoin slashed 3 times leveraged NASDAQ. They're both the same thing. Those are already crazy risky, and they're going to have insane drawdowns. So don't forget that the more risk you take, the harder it's going to be for you to keep your money that you're making. So this is just a basic, breakdown. I'm sure some of you have seen this, but the larger the drawdown you take, the bigger losses you take. You make a mistake for a week or two and you're down 50% or 70%, which happens all the time in the crypto world. You've got your work cut out for you to make a recovery. You get down to the 80%, you're going to need it to recover 400% just to get back to break even. This is how it works, and I can show you with a real live example here. So if we go to the Qs, this is the 1 times leveraged NASDAQ index, right? There's no leverage here. This is just the NASDAQ. You can see that 2022 was a rotten year for stock market. It's a rotten year for all asset classes, to be honest, but stocks went down a lot. 37% drawdown, 38. It requires 60% after that just to get back to break even. And it did, right? Because there's no leverage here. So stocks in the last 2 years have recovered nicely. If we go to the QLD, this is 2 times leveraged NASDAQ. You can see it dropped 65%. So now it needs 186% to get back to break even. And it did, but just barely. This is what leverage does to people. They think that taking more leverage is going to make them more money, and that's just not how it works. So now let's go to the 3 times leveraged NASDAQ, TQQQ. It went down 82%, which means it required 470% to get back to break even. It's below its high. This is what leverage does to people. So you can imagine this is what's happening when people are trading their Bitcoin strategies and they are trying to do it with something like MicroStrategy. You're going to feel like a rock star when you get it right. But you got to remember that Bitcoin and TQQ, they're already crazy leveraged. And then MicroStrategies is that on steroids. So in order to make money with MicroStrategy, you've really got to be willing to take your profits because it definitely will do well in good periods. And you might feel like, I can't even believe how much money I've made. But just understand that the drawdowns are going to be insane. And if you make a mistake and you hang on a little bit too long, you could be 1,000% away from breaking even. I mean, it could be that bad. And you might never get back to break even though if you were a little bit safer with the exact same strategy, just a less leveraged product, you might have been able to get out at a reasonable drawdown. Doesn't require as much to get back to break even, and you might have kept some of your money, but you do it with MicroStrategy and yeah, you could be out for years. So just remember that leverage, it sounds like a good idea in a bull market, but I just showed you one example. There's numerous examples of this. The SVXY, 0.5 times inverse short volatility, going back to 2005, is not better, or it is better, buy and hold, compared to the 1 times SVIX, right? People think, well, SVIX is twice the leverage. Clearly it's better. It's not, because the drawdowns are insane. So it takes longer to recover. And SVXY and SVIX, even though they're half the leverage, same results, right? Same thing once you go to UVXY and then UVIX. Short UVIX is a nightmare. It's great if you call it right, but make a mistake for 2 days and you're going to be down in a drawdown for 4 years. That's kind of how leverage works. So I would say MicroStrategy is fun, but let's remember that Bitcoin is already an insane roller coaster. You don't need super leverage. So there we go. Like I said, I will find a way if there's enough people interested. Maybe just have a totally separate email community of some kind. I don't want to put too much work into this. It's a strategy I've been trading for a while. And maybe make 1 or 2 videos and just let it ride. But yeah, if there's interest in that, then you can trade Bitcoin the way that I do. I definitely feel very confident that I will actively trade to a much better rate of return than buy and hold Bitcoin. I will still hold that single Bitcoin. What if it went to 1 million, like people are saying, but it's not going to 1 million. But yeah, I'm going to actively trade it, and I'm going to make a lot more than just buy and hold Bitcoin. All right, let's get to the Q&A. That's what people are here for. No favorite, no nothing. Does that mean you don't trade crypto at all? I would say if for no other reason, it's fun and it's a good learning experience. So I would say like single lot contracts and just option trade the hell out of it. I mean, take a underlying that's not going to be very expensive per contract, and just try all kinds of stuff with it. It's always a good learning experience. I don't know if that's what you meant, but probably I think that's referring to the poll maybe. Would you agree that Bitcoin is or could become digital gold? It has all the same attributes as gold, plus you can store it in your head and send it across the globe with basically zero cost. So I do think that you might benefit from watching that live stream I did where I talked about the 5 myths of Bitcoin. One of them you mentioned. A lot of people mention the fact that you can send it across the globe at zero cost or very quickly. Wire transfers take 2 days and it costs $13, but Bitcoin is free and it's fast, and that's why Bitcoin's good. That's only one of the things you mentioned, but that one stood out to me. This is not a reason that Bitcoin is good at all. Like, as I said in that live stream, we've had computer technology for like 40, 50 years that is fully capable of banks sending your money across the world in 1 second. Like in 1983, you could have done a wire transfer in 2 seconds, sending money to Russia. That's not why wire transfers take 2 days, that you have to bring your passport in, that it costs $13 for the administrative fees. That it's not because they don't have the technology and blockchain is somehow revolutionizing the world. Any basic computer can do a wire transfer instantaneously. The reason is because we have money laundering laws. We have to check both passports of both people that this money is going to. We have to log it into the system. We have to make sure that everything's on the up and up. So I get that a lot of people like that it's cheap and fast, but governments don't like that it's cheap and fast. And if Bitcoin is going to stick around, you're going to have to regulate it. You're going to have to make it somewhat transparent. You're going to have to be able to collect tax dollars from it. The government is never going to adopt something that goes to $1 trillion valuation or trillions of dollars where people can literally money launder and tax evade just like that. Why would they do that? Why would they allow you to do that? It doesn't make any sense. The whole concept of Bitcoin originally started because people have been saying that the government is too draconian. They're too overarching. It's too much overreach. They're butting into our business, and Bitcoin solves it. So now all of a sudden you're going to flip the coin and say that governments are just going to let you escape their system. I thought you just said that they were too draconian and too controlling. Why would they let anybody do this? So they're going to make their profit. Trump made more money in one day than he made in his whole life. Good for him. So he likes it for a little while. But obviously it's going to get to a point where this is the U.S. government we're talking about. No, Bitcoin is not going to play a central role in any of this. That would put 300 years of U.S. history just in the garbage, right? They're not going to just reverse course and let everybody just do what they want with their own digital currencies. That's not. In fact, if anything, it's going to get worse. They're going to use their own digital currency to control everything you do, right? They're not going to let this go for very much longer. So that's why I said active trading, I'm going to make my money, but I do not believe that the U.S. government has just given up trying to control citizens. I don't think that's the case. I think, if anything, as they become more bankrupt, they're going to become more controlling. They're just not going to play nice with this thing for very much longer. My opinion, but I think if you think about it, really think about it, who you're up against, the U.S. government. It makes some sense, right? Do you really think that the world has changed that much that they're just going to say, well, we've been trying for almost 300 years to control this currency and do whatever we want with taxes and, but it's over. We had a good run. It's over now. We got beat. Bitcoin's got us. All right. Personally, I don't think that's going to happen, but that doesn't mean we can't trade it actively. That doesn't mean we can't regularly take our profits and continue moving the goalpost, moving the chains down the field. I am not saying I'm out of the Bitcoin just because I think its days are numbered. I am also invested in Bitcoin. I showed you, I had 2 of them before most people did. I just think that using rationality, you have to, in the back of your mind, have an escape plan here because the rug pull is coming and we are going to be holding the bag. Trump is not. Trump knows exactly when it's going to happen. Trump's going to be in that room sipping expensive whiskey with all the whales that are going to do it. So he's going to make it. You and I, we have to be smarter than that. Crypto ETFs are dumb. Same vol, same risk, commissions, and less profits. Sound just going to the exchanges. So you're not specifically saying Bitcoin is dumb or crypto is dumb. You're saying the ETF structure itself is just yet another way for banks to perhaps get a little bit of money for themselves. You are not wrong. This is what they do for a living. So yes, exactly. But there is a little bit of benefit to it. I am on, okay. I thought I was on screen share the whole time, just yapping away. For me personally, because I have an international accounts at all my brokerages, I'm a Canadian, but I live in Dubai. I'm a resident of Dubai, and my accounts are actually in the United States. So I have my business registered in a different country than I live in a different country than I bank in. It's kind of like a flag system of, let's not get into the tax thing, but yeah, it's different for me. So it's actually pretty exciting for me to find something that tracks so well with the underlying Bitcoin. But I would agree with you that if you are trying to save on the fees and you do want to be a purist and you want to just hold the Bitcoin, obviously Bitcoin is slightly better. But it sure is easy for people like me, because I know some brokers now, they're actually Interactive Brokers, for example. I do believe they have a setup with some type of trust where you can actually buy Bitcoin straight from them. That would be easy. Unfortunately, it's not available for me because I have international accounts. So I can't actually buy Bitcoin anywhere but the stupid, Trezor wallet thing on the Bitcoin exchanges. It's a little bit annoying for active trading. It's totally doable, but I just personally like the ETF structure. But you're not wrong. You're paying somebody for that. And that's what they do for a living. They transfer money from us to them. They're very good at it. Okay. Why is the short volatility trade dead lately? Was the trade overcrowded and thus overvalued? Is there a way to know whether short vol is overvalued? Look at the performance in the last 2 years compared to S&P. You are not wrong, my friend. So again, I always say my live streams are not a way for me to plug my business. But if you do go to my blog, if you go to the articles, there's articles, videos, live streams. Okay, there's the plug. But I am actually starting a little mini series here. I think there's going to be 4 or 5 parts. And essentially what we're dealing with is your exact question here. I was showing that this is my volatility barometer going back to 2011. And since Volpocalypse, February 5th, 2018, if we just divide the line there, we get exactly 7 years before and 7 years after. You can see market volatility itself is significantly higher the last 7 years. And of course, in the last 3 years, we've seen, 3 of the largest in history, 2024, number 2, number 3, all-time VIX spikes. And then I'm sure there's another one on here, the last one. So there's 3 of the top 25 largest VIX spikes in history since 1990, all in the last year. And then there's others as well. So yes, you're not wrong. There is a volatility regime change where right now volatility is significantly higher in the market, which means that products that trade off of volatility, this is the SVXY, this is basically short vol. If you look at this, again, we're dividing it on February 6th. Look at the performance before and after. So long-term SVXY buy and hold 15.66, right? Not bad, but 72% drawdown and multiple 60 and 70. So don't buy and hold this thing. But before 2018, 34%. After 2018, 1.5. So this is essentially what you're talking about. So follow my website, go to the blog and follow these. It's going to be there's going to be several more of those articles. But you're absolutely right. The short vol trade itself isn't dead. It's just that these are ETFs that are trading based on, basically most of them front month VIX futures. Yeah, if volatility is 15% higher in the last 7 years, and in the last 5 years especially, starting with COVID pandemic, 2022 was ugly, 2024, like I said, volatility spiking insane. Yeah, it's been rough. Now, the trade itself isn't dead. It's the same as it's always been. It's just at a different level. This is what I was talking about before with benchmarking. You don't benchmark to the S&P 500 when you're a short vol trader. That doesn't make any sense. These are totally different underlines. There's correlation there, about 70% correlated, but there's plenty of times where stock market does way better than short vol, and there's plenty of times where short vol destroys the stock market. So you wouldn't compare short vol to SVXY. You would compare short vol to your short vol underline, and you'd compare S&P 500 equity performance against other similar benchmarks. So the reason I say this is because if you go back before the financial crisis, short vol significantly outperformed the stock market for several years there. And then because of the financial crisis, there's about a 5 or 6 year period where stocks did way better. And then from 2013 to 2017, short vol did way better than stocks because volatility was very low. It was a low volatility rise. And then 2018 happens and now it flips again. So it's not that it's broken. It's just in a period where stocks are crushing short vol because volatility is just 15% higher across the board. That doesn't affect the stock market. Plenty of people are still buying the dips all the time, but short vol is just bleeding capital constantly because of that higher volatility. So we are just in a regime. That's why I call it the volatility regime change. It will shift back. Probably there will be some type of flush out event, recession of some kind. After that, I would put all my chips on the table that short vol will once again outperform the stock market. That's definitely going to happen at some point. So yeah, it is what it is. We trade both. We trade tactical volatility is trading short vol, and it's crushed its benchmark of the SVXY, and our NASDAQ strategy uses leverage, and it's crushed its benchmark. But they go through periods where defensive is doing better than tactical, and then other periods tactical is doing better than defensive. Trade them both. This is what diversified portfolios are meant to be, right? These two strategies are our top performers, and they flip-flop back and forth between which one is better. They're both the same long term. They've both made about 30% a year, but they do it in a very, very different way. So you just have to have long-term patience and a diversified portfolio and the ability to trade multiple strategies at the same time. That's why for my Bitcoin trading, I don't just buy calls on Bitcoin. I trade 5 or 6, complex option strategies, diversified option portfolio. And some of them are definitely going to do well, and some of them hopefully tread water, and it all averages out to a great return. Okay, you can take zero delta hold coin long, short on futures, take premium arbitrage. I don't like where you're going with this. Doesn't hold for a year, but on Bitcoin, it's around 20% per year, I would assume you're getting at. So what I would say is, and I always say this with all markets, not just crypto. It's the same with short vol. It's the same with options trading. It's the same with equities. There is virtually no arbitrage opportunities for you and I. So if you're able to do this, it doesn't work. And I mean, I guess I could ask some prodding questions and we could expand on this. And it is always possible you've hit on something just nobody's ever thought of before. But the truth is that the big players will always arbitrage all of those opportunities out long before you and I have the ability to do that. So I always just blanket across the board generalization. I don't ever try to do those arbitrage trades that you're trying to, I'll sell this one and then I'll buy an option that offsets it over here and then I'll do this over here and I'll pick up the difference, or I'll pairs trade, I'll short both triple leveraged equity ETFs, and long term they're both going to go down and I'll pick up the difference. And there's always something you're missing. There's the massive fees involved sometimes is oftentimes the missing element that people don't quite understand. It could be that both of the underlines aren't exactly the same and they can deviate substantially at certain times. There is something there, but I mean, do your research. Get out your good old spreadsheet and run the numbers, but I would imagine you will find that there's something in there that you're missing that takes it down to zero. There is no free money. Free money only exists for the people that build the products. There is free money in the market, but only banks get it, right? There's free money in the Trump coin. Trump got it. He designed it to make, 84% of the money, no matter what happens. Like, that was designed from the get-go that all the money gets filtered to them, regardless of what the price of the coin does. There is free money, but not for me. I mean, nobody invited me to that, walnut room with the comfy chairs and the scotch and cigars. I don't get invited to those rooms, so there's no arbitrage for me. I just have to do it the old-fashioned way. Okay, when you say stocks always come back, what if the currency won't be inflated and the economy won't grow? There are countries that have sideways action in stocks for decades, if not more. This is true. I probably glazed over that a little bit too quickly. I didn't necessarily mean to say that stocks in a vacuum are always awesome. I guess I probably should have more said that there's no question that stocks are safer than crypto. I would say that both of them are risky. And what you're describing, I mean, Japan, right? 30 years now, it's been negative. I'm not saying it couldn't happen, but I would, if I'm putting my capital to work and I'm allowing myself 30% of my money on super risky strategies, I'm putting most of that to leveraged equities and then doing, my risky trading on leveraged equities. I wouldn't put a whole lot of that towards Bitcoin because it literally, it could quite easily go down and never come back. The world would have to be a very, very different place for the U.S. stock market to be in a 30-year drawdown. Fortunately, we're option traders and we can still make money if that happens. But yeah, I'm not a buy and hold investor, so that could happen. But I guess not that one. I should have probably been more specific. I'm just saying from a risk-reward perspective, triple leveraged equities are way safer than Bitcoin. And since they track almost the same, that's why I'm not putting it in my main portfolio. What's the point? To this day, Bitcoin has outperformed every asset. IV around 60%. I don't know if it's doomed to failure, but as long as smart money you hold. So I would say you're correct depending on the time frame you're looking at, because I just showed you in the last 4 years, this is not true, is it? The thing that people like to do with Bitcoin, and they do this with other asset classes as well, is they like to include all the best years as well, right? Obviously, if you're trying to make a case that Bitcoin's the best asset class in the world, you will start your calculations in 2012 when it was pennies or $1. Of course, that's what you'll do. But almost nobody was trading it then. So it doesn't matter what it did in 2012. It only matters what it's going to do when you are holding it. That's all that matters. So sure, if you use a 10-year rolling annualized rate of return, Bitcoin's like in the 150% range. It's crushed every single asset class by a mile. It's not even close. But in the last 4 years, no. In the last 2 years, definitely no. Yeah, it just depends on your time frame. And you have to understand as well, the vast majority of people who trade crypto are down money because that's how money works. It rises up, the momentum is there, people pile in, then it has a big drawdown, a big rug pull, and most of the people are underwater except those 300 whales that knew it was coming and orchestrated it and got out in time. So the vast majority of people, even though the rate of return on Bitcoin is like 150% in the last 10 years, almost everybody's down money. Like that's just how assets work. That's how everything works. The ARK Innovation ETF, right? I did a whole live stream on how stupid that thing is and how much money everybody who invested in it is down at this point. Because that's what happens. It's nothing for 6 years. It underperformed the NASDAQ for six years. Then all of a sudden, good old Kathy gets on all the shows, the Bloombergs, the MSNBCs, and she pumps it up and it goes from a $2 billion fund to a $28 billion fund, and all that money runs up and then it totally collapses and everybody's underwater. Everybody who bought it is underwater. She still gets to keep all her money, of course. She doesn't have to sell her house in New York, but whatever. But that's the point, is that when you see these asset classes that technically speaking, the rate of return is awesome, did you make that rate of return? Probably not. Who did? Very few people did. So I don't disagree with your general premise that Bitcoin has destroyed every asset, as you said. In caps locked. True. Means nothing. The last 3 or 4 years, it's been a lot harder to make money with crypto. And what about the next 5 years? As we've seen, every bull run up is worse than the last one. So it's going to be a normal asset class soon. That's how the world works. There is no free money. It's just as hard to make money on Bitcoin and crypto as it is for option trading. It's just as hard for futures trading. It's just as hard for currency traders. It's just as hard for equity traders. It's all the same. Give it time. It all goes down to the same difficult rate of return. So there it is. MicroStrategy is not an ETF. No, it's a stock. Even Saylor saying it. Isn't nor a Bitcoin treasure, just a holder. Sound thing, just chop in volatile options markets. Yeah, it's a stock. Sure. The thing that bothers me about Saylor is that he's trying to pitch this thing like there's no risk. Oh my God. What is wrong with people if they actually think that's true? I cringe to think what's going to happen when people realize in like 2 days how duped they were by this guy's, tweets and his interviews and the podcasts that he does. It's crazy. He says things, he's a really good charlatan, and this is what good charlatans do. They say things that seem like they're true, and even when you inspect them, it might technically be true. But in a practical sense, it's completely wrong, and it's just bullshit from the start. So the things that he says when, okay, Bitcoin drops to $1 and I still don't have to sell my holdings and all these things. So it sounds like he's basically making it sound like it's free money, right? And he's a very good charlatan. So what he said is technically true. You wouldn't have, you could avoid a margin call. Even if Bitcoin went incredibly low, you still don't have to sell your Bitcoin. So when he says those words out of his mouth, he's not actually lying. But what he's not adding on to that is, of course, you're still on the hook for the debt, which needs to be paid back with something, presumably money. So you are going to lose everything. You're just not going to get a traditional sense margin call. But you did lose everything. Like, that's what happens. But this is what charlatans do. A kernel of truth, go on a podcast, and it just gives this illusion that he's talking about some brilliant strategy that is like low risk or risk free, depending on what mood he's in the day. I've heard him say things that like basically no risk. No, it is crazy risky. And somebody has to pay those debts, and it's going to be him. Maybe not technically with his own Bitcoins. Might not get a traditional margin call. But yeah, those... He's making it sound like this convertible debt structure that he's designed is somehow brand new and just nobody's ever thought of this before. This is like one of the oldest financial industry plays there is. What is he? I guess it might be working on an audience that doesn't follow the financial industry and doesn't know about, the mortgage-backed securities things. They don't know about the structured products that they can do. They don't know about all the layering and the tranches that they've been designing. For years and years, they've been doing this. Saylor he's done nothing new. Look at his stock price since 2000. I mean, he's arguably one of the worst traders, business owner. I mean, just stock price is garbage for decades. But charlatans still make their money. So he's mega rich. Look at his stock price and tell me that if anybody who followed him in the last 25 years made a penny. Nope. But he's ultra rich because that's what they do. They always get their money out first. There's always a way for him to sell more debt, buy more homes, yachts, all that stuff. He gets it all. We don't get that. We get left holding the bag. So don't listen to these clowns. Again, trade your Bitcoin. I do it as well. I've made good money, and I plan to continue doing that. But there's no doubt that Saylor is just lying every single day. So don't be fooled by those people. I will never buy cryptocurrencies. There is only one use case for it, organized crime. Well, there's multiple use cases, and not many of them good. It involves organized crime. It involves paying for things that you don't want a record of you paying for. It involves, tax evasion. It involves all kinds of things that eventually a rational U.S. government is not going to abandon 300 years of hegemony and just say, Satoshi got us, guys. He beat us. There's nothing we can do about it. Yeah, that's not going to happen. Oh, I did that one. All right. You don't take point on this. Okay, maybe I didn't read it right. I have been accused of not reading questions carefully. USA on COVID printed 50% of currency. True. Yet hasn't go liquid. Inflation and market skew has not been even implied yet. Okay. So I agree with the money printing, but I have a somewhat practical take on money printing. I just think it's part of the game. Like it's just what they do. People have a problem with it, but I guess the thing they don't factor in is that the U.S. economy is basically 70% consumption. The fact that the currency itself gets inflated and worthless, that's a feature of the system. That's what they want. That's what is happening. It's intentional. So a lot of people are like, oh, well, of course what they should do is they should have Bitcoin as the currency so that you can't print it. And there's only 21 million of them and the government can't inflate it. And inflation's a thing of the past and all our problems are solved. And no, that would destroy the economy. If you had a currency that didn't depreciate, you are in a world of hurt. If people actually thought that their dollars might be worth more next year than they are today, everybody starts hoarding, don't they? And the entire 70% of the U.S. economy goes off a cliff. The deflation, the COVID printing, this is all part of the plan. Like, don't get upset that they're engineering that on purpose. They're making it so so people are buying things. They're buying real estate. They're buying crypto, buying watches and boats and stuff. You know, they're using their stimmy checks. If you gave $1,500 of stimmy checks to every American in the form of Bitcoin, that wouldn't do anything for the economy. That would be a terrible thing because nobody would go out and spend it. The whole point of the stimmy check is that money is just worthless paper. It's going to depreciate for sure. So as soon as you touch a dollar bill, get that thing in a hard asset, right? That's the game. Who cares if the currency is deflating? Put it in stocks that go up with inflation. Put it in real estate that goes up with inflation. Put it in a high interest bank account that goes up with inflation. A stat that people often quote is that the U.S. dollar is down 96% since like 1916 or something like that. What they don't factor in is that, yes, that's true. If you put dollar bills in a shoebox, it's down 96%. But if you put those same dollar bills in a low interest bearing account, it's actually up money in the last 100 years. Inflation hasn't done anything to them. There's a very close relationship between interest rates, inflation, and all these things combined. So as long as you're not putting your money under your bed, who cares? Like, let's just end this deflation, money printing nonsense conversation that means nothing to the economy. The reason everybody's just consistently disappointed for decades and decades, waiting for this thing to crash, and it's not going to. And they're like, what's going on? The debt's 34 trillion and money printing out, and it's not collapsing. What's going on? It's because you've misunderstood how the economy works. It's because it's not going to collapse. The whole point of the money printing is to get the economy going. People are missing the point in this. So maybe that had nothing to do with your question. I don't know. But I felt like I had to say it. I see this on Twitter all day long, just scrolling, people talking about money printing is going to eventually lead to this epic collapse. And, oh my God, they printed 40% of all dollars in circulation in the last 5 years. And can you believe, like, Roman Empire is falling? No, it's not. The US dollar is still going to be the reserve currency when I'm long buried. Trust me. There's no replacement to it. What, are you going to replace it with the euro, the yuan? No. The U.S. dollar is here to stay. The U.S. economy is the strongest in the world. Everything is fine. These are just numbers. 34 trillion debt. It's just a number. Money printing, all of that. It's part of the plan, right? You just got to just take a deep breath and just let it go. All this deflation stuff and just let it go. Focus on hard assets. Focus on trading. Focus on getting a rate of return that outpaces inflation. Just forget the whole thing. Forget the money printing. As long as you're making more money with your investments than the inflation is hurting you, you're golden. That's all you need to worry about. So don't put it in a shoebox under your bed. That would be a big, big mistake. I can guarantee you it'll lose money if you do that. Calendar roll, kind of the other side of the poor man's covered call. I don't know. I don't know what that really means. Yeah, it's just something I called it. Just called the calendar roll. It just made sense in my head that I'm buying a long-dated calendar with the point of hopefully eventually either making enough money on it that I can just sell the whole thing for a profit, or make enough money on the shorts that the long put is free and I can hopefully roll the dice and catch a winner on that. So, and it's very, very appropriate for something like Bitcoin, because as we know, a strategy like the calendar roll will do better if there is a possibility of a crash and if they do happen with relative frequency, right? You don't have to do too many of these to actually get a couple of them that get a good runner. So, yeah, I don't know. The name is just something I called it. I don't think anybody else will associate with that. That's just an internal name at VTS. How does the calendar roll correlate to the other strategies in the VTS portfolio? It's a good question, but unanswerable, because of course, it depends on the timing. It depends what asset you're trading. You can do this calendar roll positively or negatively correlated, depending on the timing and what market cycle and your purpose. Sometimes I do it, like I said, for the purpose of actually cashing in all the shorts and then closing out the put as soon as I've made enough money. And other times I'm doing it explicitly to just let the put sit there for a while. So I might do a year calendar, and it might take me 5 months to make that money in the short dated options. It might take 6 months, but that means I might get a free 6-month put option on Bitcoin that I just get to sit there. So as far as correlation, I don't use it that way. I don't track it that way, I should say. It's just I'd say about 70-80% of my strategies are very systematic, and some of them are entirely discretionary. And this one is just 100% discretionary. I'm not looking at, these 3 metrics are flashing that, so I'm entering a calendar roll. I don't do that. I just wake up on one day and I think, that looks good. So like a calendar roll set up 3 months ago would have been good, right? So let's say you do it when Bitcoin crossed 80,000 or something. My last trade was in November. Close out my Bitcoin. What was it at? I think it was November 20. I can't remember these things. Anyway, the point is that, I closed the spreadsheet down. You could have done that, and then by now, certainly by January, you would have had a free put option. And then lucky for you, you got a put option that would have paid off very, very nicely. I didn't personally do that. I think I sold mine in December, so I still haven't made my money yet. It crashed a little bit too early for my current trade, but yeah, it works well. Okay, here we go again. If you take leverage on the dip, how much beta dislocation will be helpful? Sorry, English, not my language. Well, Chinese isn't mine, but I still speak, and I appreciate when people don't, ride my Chinese. So for me personally, this is unimportant to everybody else, but the fact that you even speak a second language should get the highest level of respect, because most people speak one language, and I speak passable Chinese, but I couldn't do this. So good for you. If you take leverage on the dip, how much beta dislocation will be helpful? I have to admit, I don't know what you're asking. Maybe try again. Sorry. Sometimes I have to punt. Find an edge and use leverage to exploit the advantage. I agree with that. It's just what level of leverage. Like for me personally, in our defensive rotation strategy, of course, I do use 2 times NASDAQ in that strategy. The reason that I can do that is because I'm so confident that if we just look at how the strategy works, I'll use this one because it's open, right? When we are in mid to low volatility, this is when we're going to be making our profit. When this thing is going to have those epic collapses, and it does, the SVXY can go on runs of a few weeks where it's just 70% drawdown, right? But by then, we will already be exited to safety. So what do I care, right? It's kind of the same thing as the Bitcoin breakpoint strategy. I know Bitcoin's going to have an 80% drawdown. It's definitely just mark it down. It's going to happen. But I'm confident that That's going to happen when market volatility is elevated. There's no way Bitcoin's crashing 80% and the VIX is at 14 the entire time. That's just not going to happen. So, like you said, you find your edge. Mine is tactical rotation. I'm going to be in a safety position when, the shit hits the fan on the underlying. I don't care if it suffers 80% drawdowns. However, we don't bat 1,000, right? Sometimes we get into drawdowns, and this is when you have to decide, like 9 times out of 10, I'm going to avoid all of that pain. But there was one year in 2022 where we didn't get the accurate signals. 1 year in 13, we had a down year. But I would not have wanted to be in triple leverage NASDAQ because it just would have made it worse. And then I would definitely not wanted to be in micro strategies, would have made it 9 times worse, right? You're going to be wrong sometimes. So I agree that you find your edge, you exploit it, and you go aggressively when you can. But you also have to understand that you're going to fail. You're just going to miss it sometimes. So don't take so much leverage that when the inevitable happens and some market just blindsides you, that you've screwed yourself and now you're in a 6-year drawdown. Don't do that. But yeah, find your edge and hit it hard when it's available because they're hard to find and they don't last forever. Bitcoin's not as liquid as people think. Sending Bitcoin directly isn't slow and expensive, but you can sell anonymous wallets free of charge and e-scrutinies. Avoid scrutiny, maybe? Yeah, I don't know how liquid it is. I think it's completely, isn't it? Plus the ETFs as well. But as far as the speed, sending Bitcoin directly isn't slow and expensive. No, I don't see anything wrong with Bitcoin other than if you were to go back, this is a good mental exercise for people who are just on the Bitcoin train like this and they can't see anything. Try to imagine going back 20 years before you ever heard of what Bitcoin was. And just say, what would you say in the year 2000 if somebody said, how amenable do you think the U.S. government is going to be to a potential competitor to their currency that they can't track anything, that you could hire a hitman and nobody would know, that you could support a foreign government and nobody would know, that you could send government to a foreign president who has their own currency coin, and you could essentially buy the presidency or buy the attention of the president in any country. So let's use Vladimir Putin, not Trump. Maybe Putin has his own coin soon, or maybe he does already, I don't know. And what would you say that the government would want to do to that situation? You would for sure say, what is wrong with you? This is the U.S. government we're talking about, or this is the Russian government we're talking. You think they're going to let you do that? You're crazy. They're not going to let you do that. That's what I feel like I'm in right now. Like I'm watching all these people who seem to have forgotten hundreds of years of like imperialistic history. What is going on? Like, of course, this train is going to go off the rails at some point. How could it not? And I know the argument that some people are going to make is you can't stop it. Because it's untraceable, because it's not regulated, you can't stop it. I never said that they could just shut it down. What I think is going to happen is, like I said, they're going to do a stimmy check and they're going to get everybody into the Fed coin system. When that is finally ready to go, they're probably using all this Bitcoin stuff as just gathering data on people's, behavioral patterns around crypto. They're getting people warmed up to the idea. So when the Fed coin comes, it's like, oh yeah, a new digital. We're used to it. They couldn't do it in 2014 because people would be like, what the hell is this thing? I've never even heard of digital currency. So they let Bitcoin be the guinea pig and they let the line go as long as they want. But at some point they pull the line and that's it. Now they reel it in and they launch their own Fed coin. They launch a stimmy check. If you want to get your stimmy check, you have to sign up for the Fed system. And now everybody's in the system. And then they pass laws saying that trading crypto is illegal. And you might be sitting there thinking, well, so what? I can still do it. I don't care what the U.S. government says is legal or not. I can buy crypto and they'll never even see it. True. But 90% of the people won't do that. Most people follow the law. That's just what they do. They will go along with what the government says. We saw that during the pandemic. There's a lot of people who, not a lot, but some people are able to just resist. And they're just going to be the rogues and they're going to resist. Great. But most people are going to do what they're told. And that's what's going to happen with crypto, is that, of course, you're going to have 10% of the population that just refuses to accept the laws of the US government. And they're going to trade their crypto and they're going to still do it. And they're going to try to keep the dream alive. But most people are going to follow what the government says. That's just the way that the world works. So that's how I think it's going. I'm not saying it's just going to be like banned illegal and it's dead to zero in a day. I'm just saying it's going to fizzle out. And there's just not going to be enough people who are willing to risk tax evasion penalties in order to continue fighting the good fight. They're just not going to do that. So you have to be rational about this. You have to understand that this is not in the US's best interest to let this thing go too much longer. Once it reaches a certain level of valuation, at that point, it's going to be very, very problematic for them. And maybe I have a lot more respect for the power of the US government than other people do, but I just can't believe I'm watching this happen and everybody thinks this party's just going to keep going. It's not. So, but unfortunately, I can't predict when it's going to end. And not end, but slowly fizzle down, right? You get 1 million loyalists and then 100,000. And then 50,000, and then 10,000. And then eventually there's just, what's that guy's name? The McAfee? Why did his name pop into my head as like an example of somebody who's hanging on to the bitter end? I don't know. I don't know where I was going with that. But yeah, I'm short-term bullish, medium-term worried, long-term bearish, for sure. All right. This is funny. I think it was a couple weeks ago, you asked me when it was launching, and I said in that live stream, I really hesitate to give a date because what if I disappoint? I think I said June 1st. All right. I will work as hard as I can. I was not planning to go to Dubai and go into my cave by myself until April 16th, but I think I'm going sooner and I'm going to stay longer. So yeah, confident-ish. I think I've answered that one. Michael Saylor selling leveraged Bitcoin as free money is funny to me. Even some big banks trust him. I don't think they trust him. Nobody trusts each other. This is the funny thing about what's happening in the US right now with so many of these charlatans rising to positions of power. I promise you, none of them like each other. None of them trust each other. There's no way these people have any loyalty to each other. But the thing is, money, right? We can all make money. We can all have differing opinions. We can all hate each other. We can all be on power plays. And, if a couple of these people start getting ousted by the administration, like they're the cool kid now, but they're outed, nobody's going to stand up for that person that gets outed. They're just out and gone, right? We saw this in the last Trump presidency where he seems to build these people up. They're the best person in the world. He'll do a press conference. There's just, I choose nobody but the best people. I have the best judge of character and they're all awesome. And then 3 weeks later, they're the worst person in the world and they're fired. And nobody has any loyalty for those people. They're just ousted and that's it. So big banks trust him? No, everybody knows Michael Saylor is a charlatan liar. But there are some people that know they can make money with him. So they will put up with him for a while. What I don't know the answer to is when some of these people who are really big in the space start to get a little squeamish, at that point, I don't know how fully coordinated it's going to be. Some of these rich people are going to be not so rich if they don't catch the right wave. If they weren't at the big rug pull meeting, some of these people might lose their money. So it's all interesting to me, but I would say no. To use the word trust, no. I think that banks know what he's doing is just the oldest trick in the book. They looked at it, they're like, oh yeah, we did that in 2007. This is nothing new to us. We got this. It's big money when it happens, and then all of a sudden it's terrible. And of course the government will bail us out because it's socialism for the rich people and it's austerity for all of the rest of us. We all know that. That's the game they've been playing. All right, does SVOL in general follow VIX? No. Meaning it makes sense to buy it when VIX is way elevated and wait to sell when. So no, SVOL trades based on front month VIX futures, and it's very low leverage. It's like 0.25, 0.3, something like that. Actually, it's not the front 2 months. I think they've included some longer dated as well, third or something, fourth. And there's a little bit of a VIX hedge as well, like out of the money calls. But essentially, consider SVOL, I mean, for all intents and purposes, 0.25 front month VIX futures, more or less. It's like SVIX is -1, SVXY is -0.5, SVOL is like 0.25. Forget the dividend. The dividends mean nothing. Dividends come out of the stock price. I've explained that many times. It's not money that's given to you. So the problem is that it's all of the volatility ETFs are not, first of all, they're not all correlated. So it's, again, lower correlation to other VIX, stock market, S&P 500 options is what the VIX is tracking. VIX futures are not the S&P 500 options market. So they can decouple wildly at different times. To understand that always remember, volatility ETFs trade based on the front 2 month VIX futures. That is a freely traded market. The VIX Index is derived. It's basically just a statistic, an untradable statistic. Consider it a formula. It is basically derived on S&P 500 options activity. You don't ever know what that option activity is doing. So it's just spitting out a number calculated for the VIX Index. The VIX Index is not SVOL. Totally different products. They move completely differently. So there will be times when you can say, oh yeah, the VIX is high and then I'm going to follow these waves. But there are other times when it's just going to completely collapse. This is one of those examples I was talking about where it's very dangerous to try to like quasi arbitrage or use this to track this. If they're different enough, it's going to blow up in your face at some point. So I would forget about the VIX Index and focus on just the VIX futures market. That would get you a lot further in trying to predict when these things are going to go up and down. I personally don't even use the VIX Index unless it's paired with multiple other metrics as well. On its own, it means next to nothing. By itself, the VIX number, okay, S&P 500 options, who's to say what those options mean? They could be bearish, could be bullish, they could be a massive part of an otherwise net long portfolio. It could be hedging, could be speculative, could be income. Nobody knows. The VIX is just a number. Have you been in China recently? If positive, how does it compare to the USA? Shops, entertainment, cars, malls. So no, I have not, but I follow China online. I read a lot about China. I hesitate to say too much because, of course, Americans are very proud and they get very upset when you talk about how there's other places in the world that are also doing well. I do notice that there's a lot of Americans who like to believe that the whole world is collapsing and that America is, just crushing everything. But the truth is, I'll give you a little bit without trying to insult too many people, but a lot of people would say that China's like a backwards rural third world country and USA is just this like ultra dominant. I think if you spend time in both of them, you might flip that. Like China has advanced and modernized at a rate that is hard to even put into words. It's so much further ahead of the United States at this point that it's almost inconceivable that they are not going to be the dominant world leader in our lifetime. Like it would be impossible for me to imagine a situation where this trend doesn't continue. The U.S., and we'll give Trump his chance, right? I was the one, I did live stream saying, I hope, let's give him a chance. He wants to try something new. I was saying like a Kamala Harris presidency, it's just same old, nothing's going to happen. It's terrible. I don't want to see another one of those. So I was saying like, even though Trump is obviously a liar and a charlatan, let's see what he has in mind. Let's try to shake things up. And it's only been a month, so let's give it some time. But I mean, other than fleecing the Treasury and, deregulating everything so the big banks and, the corporate billionaires can basically pillage the system, I just don't see anything that's going on right now in the administration that's going to actually close the gap effectively with what China's doing. And they're just winning right now. Unfortunately, they're winning on all fronts, and they have problems too. Like they've got a few resource problems. They've got, aging population problems. They've got entire cities that they built that nobody lives in. I mean, I'm not saying it's perfect, but yeah, China's just radically ahead of the United States at this point in technology and forward thinking, and maybe it's an unfair advantage because, in a democracy, things are very slow moving. I live in Dubai, right? So I can attest to if you get a good leader, of course, a dictatorship or a monarchy, it could be the worst thing in the world when you get a bad one. But when you get a good one, things can move at an incredibly fast clip. And I think China's kind of got their mojo in the last 10 or 15 years. A lot of the things they've done have turned out to be really good. And I'm not saying I support like communism or dictatorships or anything. I'm just saying that when you've got 6 people that you need to ask and then you say, oh, let's do that, they start the next day. Like things get done very, very quickly. In the US, it's like, yeah, just different system, and the U.S. is losing. So I wish them luck. I love the U.S. I lived there for many, many years, and I'm Canadian. We're neighbors, and hopefully we're still friends, even though Trump wants to steal us. But we're still friends. But yeah, China's China. They're crushing it. If 50% printed hasn't been implied yet, where is the asset class more probable to go put in? Oh, I think I know what you're trying to get at here. For the time being, I personally think it's crypto and commodity futures. Yeah, a lot of the extra money, like you're talking about the excess money in the economy, where is it going? Well, obviously real estate. That's one place that it's gone. Real estate prices have gone up a ton. Stocks, even though it's really, you could say 10 companies, right? Most of the stock market has not done well at all the last 5 years, but 10 companies have just blown the doors off. So it's going there, and a lot of it is going into crypto. You're talking about a market that was nothing during COVID, like a small market, and then all of a sudden now it's just unbelievable. Yeah, that's where it's going. What we're seeing is excess money problem. So if you can't beat them, join them, right? That's why I went on that whole stupid rant about inflation and money printing and how we just stop it. It's interfering with people's ability to just see what's actually going on. I just want you to make more money. I just want you to see the world the way it actually is and get in there and make your money. And yeah, crypto, stocks, real estate, get your money into hard assets. And I would recommend not buy and hold, of course. And then you got nothing to worry about. Question got missed above. Sean, let's try to find it. Is this it? Before you actually go live with your options, live with your options platform, will you be able to let us subscribe to the options trades you are already doing? Like in the next 2 or 3 months? No. Unfortunately, no. The reason that I stopped the options community in the first place was because I was doing that, right? We used to have VTS and VTS options, separate sort of communities. And VTS options was very popular at the time, but there was no course underneath it. There was a couple videos, but more or less I was trying to do it through a daily blog and just random articles here and there, and just an unbelievable number of questions and confusion and people, getting ahead of their skis and getting into some trouble on things. So I had to make a decision to save my email inbox and just shut one of them down. And so it made sense to shut the VTS options down so I could build a course underneath it. So if I start doing this again, I will run into the same problem. I will just be answering more and more questions that every second email I get, the answer is going to be, I'm sorry, this is my fault. I didn't explain it clear enough. I need to make 10 videos and send you those, and then you'll understand. That's going to be the answer. So why don't I just finish the damn course, launch the thing, and then we will have way more people understanding. It doesn't mean they'll get it right away, and it doesn't mean my job ends. We're going to do live streams every week. We're going to do more stuff. But I have to have at least a baseline number of videos that people can refer to so that a lot of the initial back and forth can be cleaned up, right? It was a nightmare. I'm not complaining. That's great that I had so much support for the community, but it was overwhelming, and it rightfully so. It's confusing. Options trading is not easy. So got to say no to that request. I just need the time to finish it. All right. So I left off here. Then you answered, and I answered this. Okay, in case you will design new strategy that will success 2022, what would you fix in defensive rotation strategy? I like this question. So for anybody who doesn't know, 2022, what spreadsheet do I have open? The wrong one. 2022, the strategy was down about 38%, something like that, 38%. But it's long term. It's in the other 3 years before and 3 years after, it's up like tons. So it's done extremely well. But it did have a bad year. It's because we use leverage. But interesting question, what would I change? The honest answer is nothing, because I actually wrote a whole article. I did a whole video on this subject already. But it's only happened to me once in 20 years. And it is the outlier. 2022 was just a year where volatility was acting weird and some of our signals were not great. But then when we moved to safety, even when we got the good signals, our safety positions were also down just as much as stocks, like real estate, utilities, gold, bonds. They were all down. Everything was crushed. So there was nowhere to hide. There was nowhere to go. Moving to safety didn't do anything because utilities got hit as well. And so it was just one of those weird years. What would I change? Nothing. You don't ever optimize strategies for the outlier year. If I have 15 years of experience trading something, right, tactical rotation in equities and utilities and cash, and only one of those years it failed and the other 14 it did well, the last thing in the world you'd want to do is optimize a strategy to fix 2022, because that would break every other year, right? I've actually gone through that exercise and I thought, okay, well, let's try to move some things around. Let's try to make the signals more sensitive. Let's try to move into different safety assets, and let's make it look like 2022. Instead of being down a lot, it was only down a little. Great. But then the other 10 years looked way worse than they were. So overall, it's much worse. So the truth is, and I learned a valuable lesson that year, that sometimes, even though you're losing money, sometimes the best thing to do is to not fix it. Sorry, I hate switching spreadsheets like mid-streams. It just looks, I wish I had spreadsheets that I could have 5 of them open at the same time, but everybody knows I've struggled with spreadsheets. But trying to go by memory here. What was I going to say? Kind of lost my train of thought there. So the defensive rotation strategy was down 38% in 2022. But I didn't change it, right? I didn't do anything to it. I just said, look, it's been doing so well for the previous 10 years, and I'm not going to fix it. I'm not going to do anything, right? And I can show you that decision turned out to be a pretty good one. So this, oh, you're staring at me. This is the performance. So 38, yeah, I guessed pretty well there. So this is the strategy. Let me see if I can blow this up for everybody. These are the numbers for defensive rotation. And obviously 2022 sucked. Like, I'm not saying I was happy doing it, but I didn't change anything. I just said, I analyzed it to death. 3 weeks I put into just all day and all night working on these strategies, trying to figure things out. And my end conclusion was nothing's broken. It was just a bad year. And then the next year we did great. Nothing wrong with that. And this year, nothing wrong with that. So this is one of those hard lessons that you have to learn, that sometimes, even if you lost money, doesn't mean it was a bad trade. And sometimes when you make money, doesn't mean it was a good trade. You just have to do the right things at the right time and trust that in the long run, it's all going to work out, knowing that there's going to be times you get punched in the face. Like, it's just going to happen. Defensive rotation, it sucked. Had a big drawdown. Recovered it in 6 months, and we're way past all-time highs at this point. Like, we've made 130% since then. So, yeah, sounds like a punt, but I wouldn't change anything. I really wouldn't. There's nothing broken. It was just a bad year. It was a year where safety positions didn't help us a bit. And what's the point of tactical rotation if safety doesn't help you, right? It might as well just buy and hold at that point. So we had 1 year out of 13 where I would have just preferred to just be a dumb buy and hold. I probably would have lost about an equal number. Actually, it was almost exactly equal. Buy and hold QLD. Oh no, buy and hold QLD was down 60. So I crushed buy and hold, but you get my point. I've heard of Bitcoin from the beginning, always tempted to buy. Couldn't because I was a minor. Don't care about tyrannical government. I live in South America. Government, even to go tyrannical. I heard about it too early, and I didn't buy it either. I was actually going to put $10,000 into Bitcoin right around 2013, 2014. Obviously, I'd be a mega millionaire, but my brain doesn't work that way. So the consolation in my mind that makes me not regret it every day of my life that I didn't make $100 million is I don't have that kind of brain to buy something and hold it for very long. I bought Apple stock in 2002, split adjusted like $17, right? I'd be a mega millionaire if I just held on to it. But Apple went from like 17 to 68 and I sold. And I thought, oh my God, this is amazing. I more than tripled my money in a very short amount of time. I was happy. I wasn't going to hold it for 18 years. So do I regret? No, I wouldn't have held it. Even if I bought Bitcoin in 2013, I would have tripled my money, bought a couple pizzas with it, and that would have been it. I don't have it in me to buy something and just let it ride. So you're probably like me, you know. I heard about it as well, and I damn near did it. But even if I did, I would have made 50 grand. It wouldn't have been a big deal. I wouldn't have made 100 million. So I don't regret it. But yeah, I heard about it soon as well. I was pretty early on Bitcoin, but just didn't do it. And so now what I'm doing is I'm doing something fun that keeps me engaged with the process, right? Active trading, tactical rotation, lots of options layered on top of each other. This is going to keep me in the game and making more than buy and hold. So that is the plan. I can't buy the thing and just let it sit there. Even my one Bitcoin, I'm almost like every day kind of thinking, well, what's the point? Is crypto just a fancy multi-level marketing Patrick Bet-David style? Is this ethical? Don't tell me that you're down on Patrick Bet-David. I mean, come on. I think he's one of the king charlatans, isn't he? And the thing about it is the reason that I don't go on these tirades talking about these people that are just so obviously frauds is what could I ever say to Patrick Bet-David to make him feel bad about himself? Like he's made hundreds of millions of dollars being a charlatan. You think he cares what any of us think of his business practices? You think he cares that people are making YouTube videos explaining how he was scamming his multi-level marketing scheme? Think he cares that all 300 or so people below him lost money and he made hundreds of millions? Do you think he cares? No. He's got a $50 million house in Florida. He hangs out with all the other, questionable characters, and they're living the dream. So yeah, crypto's that. It's a multi-level marketing-ish. Like it's not a direct thing, but it's get people in, just spray the block with content, making everybody buy the stupid thing. And the more people you trick to buy it, the more money you make. And then eventually they're all going to rug pull us and we're all going to lose money. There you go. I'm wondering whether I should take VIX relatively 20th percentile and median of VIX in 2020 is 20 and 27, but those in 2023 is 13 and 17. I do the same. I do everything with percentiles, but you do also want to have rolling percentiles because like you're explaining here, volatility means something different in different regimes, right? Volatility, mid-volatility in 2015 was like a pretty low VIX number, right? 2017, it was really low VIX number. But as I showed, volatility is up the last 7 years, and it means something different. VIX 18 to 20, it's kind of normal. Long-term, VIX 20 is, I think the median or the mean is about 18, right? The median is about 16, but the mean is 18. But there's plenty of times where 18 is really high volatility, and there's times when that is not high at all. So I would do percentiles always. Absolute values are terrible. They don't tell you a whole lot, so do your percentiles. But then, of course, do rolling periods as well. And like, do I really care what the VIX was in 2006? Like, is that going to really affect my trading at this point? No, probably not. Okay, we all have low birth rate problems. Yeah, the whole world is facing the same similar thing. Guess we should all have 13 kids, like our friend Elon. Could your quant model could be applied in foreign stocks? Mine is slow blue chips, pretty much cyclical finance and commodities, very similar to Canadian stock market. Well, I would say no, because the signals themselves would be fine. There's definitely a very high correlation between U.S. equities and foreign equities, pretty high correlation, so it would all work pretty well. The problem is the underlying itself needs to also make money, and there's a lot of foreign equity markets, for example, that are just totally flat. So even if I could successfully tactically rotate with my signals and apply it to the German stock market, doesn't do me any good if the German stock market's flat, right? I could improve on the buy and hold of the underlying, whatever I'm trading, but that might not be very impressive, right? If the underlying itself isn't also good, then what's the point at all? That's why you need two things in order to target something for a tradable security. You need one, it has to go up. It has to long-term, you have to think that this thing's going to make money on its own. And then secondly, it would be better if it had some drawdowns, right? It would be very difficult to trade a fixed income ETF tactically and make more money than the underlying fixed income ETF because it's this. How do you improve on that? You can't shave any of the drawdowns. You can't avoid any of the problems. So you can't fix it. It's just buy and hold. Bitcoin is a little bit on the other extreme. There's plenty to shave off on the drawdowns, but then you also get gut kicked unexpectedly at times too. So I like to look for things kind of in the middle, things that have long-term decent performance, like SVXY is up 15% since it launched, or since 2004 actually, with a 72% drawdown. That's amazing because all we have to do is just avoid the drawdowns and we can improve the performance. But unfortunately, as you were asking, foreign stocks oftentimes are flat or negative. So no, I wouldn't do it. All right, that's it. I don't think there's anybody else left here. No questions, so we did it. Like I said, if anybody's interested in the Bitcoin stuff further than I just went over, I would be more than happy to dedicate a little bit of time and to find a way to let everybody follow along and maybe create some type of community around it. I can't dedicate a whole lot of time to it, of course, because I have to finish the option stuff, but there it is. That's what I do with crypto. Pretty sure I'll crush Bitcoin buy and hold, and I hope you do too. But be mindful. That thing is dangerous. People don't know it yet, but it's going to be gone soon. All right. I will see everybody next week. Thank you.